Fibonacci numbers. So now we have concluded some of the preliminary discussions on Elliott wave theory. We will now turn to talk about Fibonacci analysis and look at how that fits into wave theory. The first thing I want to talk about is the Fibonacci number sequence itself. So what is the Fibonacci number sequence? Well, it was invented by a famous mathematician who went by the name Fibonacci, and he invented this number sequence, or discovered it, and this number sequence has some particularly interesting properties. So let's start by showing you the number sequence itself. So now if you look at the first line, we have 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, 233, and so on. So how do we come up with this number sequence? Well, the sum of two consecutive numbers will equal the next higher number. So each number is the sum of the previous two numbers. So if we start with 1, 1, you can see that 1 plus 1 is 2, so the next number is 2. Then 1 plus 2 is 3, so after 2 comes 3. Then to get the following number, we do 2 plus 3, which is 5. We do 3 plus 5, which gives us 8. We do 8 plus 13, which gives us 21. 21 plus 13 gives us 34. 34 plus 21 gives us 55. 55 plus 34 gives us 89. 89 plus 55 gives us 144. 144 plus 89 gives us 233. And this is how the sequence continues. So what is special about this sequence? Well, what is special is what is known as the Fibonacci ratio. So the ratio of one number to its next highest number approaches 0.618. So if we take the ratio, for example, take any two numbers in the sequence, the ratio of the lower number to the higher one will be 0.618. Now, at the start of the sequence, it won't be exactly that, but as we go through the sequence, it will approach that number, and within a few numbers, it will pretty much be at 0.618 throughout. Okay, so that's the Fibonacci ratio, which is quite important. And just like that, the ratio of one number to its next lowest number will approach 1.618. So if we take the same two numbers and do the ratio the other way, right? So if, let's say we took 55 and 89. If we did the ratio of 55 to 89, this would be 0.618. If we did 89 to 55, this would be 1.618. So that is also the Fibonacci ratio. And the ratio of two alternative numbers will be 2.618. So if, for example, we took 55 and 144, the ratio would be either 2.618 or 0.382, depending on if we put the smaller or higher number first, just like with the single number ratios. And this essentially gives us the Fibonacci ratio, which is very important to wave theory, and Fibonacci retracements as well, which we'll see later in this lecture. So now this ratio only comes about slightly later on in the sequence. So the sequence extends infinitely. And the first few numbers don't have ratios that are close to 0.618. They do approach it though fairly quickly. And by the fourth, fifth number, you'll see that it's practically 0.618, and that stays constant throughout the number sequence. Fibonacci ratios. Now what we are going to do is go through some of the ways in which we can apply Fibonacci ratios to Elliott wave theory. So within Elliott wave theory, if you remember, we said that we had pattern, ratios, and time were the three things that we needed to be aware of. So we've looked at patterns so far in this lecture by looking at the wave patterns and the corrective wave patterns. Now we will look at the second part, which is ratios. So ratios is looking at the length of each waves in relation to the other waves. So we're going to go through some of the common relationships that are observed, and this is what Elliott wave theory tells us we should see. Now, if you find it slightly complicated to follow, don't worry, I also found it the same. The thing to know is that you just have to read it quite carefully if you really want to picture what it looks like. So I'll just go through them, but feel free to stop yourself and read through it in detail if you need to understand it better. So here's the first relationship. One of the three impulse waves often extends, and the other two are equal in time and magnitude. So the impulse waves are the waves 1, 3, and 5, right, within our 8-wave corrective trend. And what we are most likely to see is that one of those 3 waves will be long, will be extended, and the other 2 will be roughly equal. So we're likely to see 2 equal length waves and 1 longer wave. So for example, if wave 3 is the extended wave, then waves 1 and 5 will be around the same length. The second thing we will look at, a minimum target for the top of wave 3 is obtained by multiplying 1.618 by the length of wave 1 and adding it to the bottom of wave 2. This 1.618 is the Fibonacci ratio. So what does this mean? Well, a minimum target for the top of wave 3. So we're looking at how high does wave 3 go? What is the minimum length that wave 3 should be? So this is within our 5-wave sequence. And we're looking at it in the context of uptrend, 5 upward trend, 5-wave uptrend. So to get the target for the top of wave 3, we take the length of wave 1, multiply it by 1.618, and add it to the bottom of wave 2. So we take wave 1, it'll increase in size because we're multiplying it by 1.618. We move that to where the bottom of wave 2 starts, and that length should tell you the target minimum top of wave 3. Alright, so now here we've seen 2 different examples where we've applied Fibonacci ratios in order to determine magnitude of waves. Now we'll look at some of the other ones. There are 8 of them we're going to look at in total. So let's carry on. Fibonacci ratios. 3. The top of wave 5 can be found by multiplying the length of wave 1 by 2 times 1.618 and adding that to the top or bottom of wave 1 for the maximum and minimum targets respectively. Let's explain what this means. Again, we have our 5-wave uptrend pattern. The top of wave 5 is looking at the highest point for wave 5. How do we find this? Well, we take the length of wave 1, multiply that by 2, so we double it, and then we again multiply it by the Fibonacci ratio, 1.618. So now we're going to have a wave 1 that's times 2 times 1.618. We add that length to the top or bottom of wave 1, and this gives us the maximum and the minimum target. So if we add it to the top of wave 1, that gives us the maximum target. We add it to the bottom of wave 1, that gives us the minimum target. Alright, so the top of wave 5 will be somewhere in between that maximum and minimum. And this is how we are going to find wave 5. So you can think of how to use this. If we have the first wave, if we've seen the first wave in the 5-wave sequence, we want to know where we expect the 5th wave to be. If we want to trade based on that, we can use this analysis to find a target. 4. If waves 1 and 3 are equal in length, wave 5 will extend. This is partly back to what we said in one of the earlier ones. To find the final price, we take the distance from the bottom of wave 1 to the top of wave 3 and multiply by 1.618 and add the result to the bottom of wave 4. Again, it's quite a few different instructions here, but if we just go through it one by one, it's not very difficult. So if we have waves 1 and 3 are equal in length, wave 5 will extend. If you remember, we said that if 2 waves are equal, 2 of the impulse waves are equal, one of them will be extended. So once we see waves 1 and 3 being equal, we'll know that wave 5 is going to extend. To find the final price, we can take the bottom of wave 1 to the top of wave 3, that distance, right? We multiply that distance by 1.618, the Fibonacci ratio, and then we add that result to the bottom of wave 4. Right? So we're going to have a length between 1 and 3, top bottom of 1 to the top of 3, and multiply it by this ratio, add that to the bottom of wave 4, and that gives us where we expect wave 5 to finish. Number 5. This is an easier one. In a 5-3-5 zigzag correction pattern, wave A is equal to the length of wave C. So when we see a 5-3-5 zigzag correction pattern, if we've seen waves A and B, we can expect wave C to be equal to the length of wave A. Fibonacci ratios. 6. So another method we can use to find the length of wave C is to multiply the length of wave A by 0.618 and subtract that from the bottom of wave A. Okay, so let's think about how we would do this. So if we have an ABC correction, one way which we can find the length of wave C, we would take the length of wave A, multiply it by 0.618, which is a Fibonacci ratio, so that will make it smaller. And then we subtract that length from the bottom of wave A. Alright, and this will give us how far low, where will wave C reach. Alright, so that is how to find the length of wave C. Number 7. If we have a flat 335 correction pattern, wave C will equal 1.618 times the length of wave A. So, in a 335 correction pattern, that is, we have our flat corrective pattern, which is an ABC pattern, we will have wave C equal 1.618 times the length of wave A. Alright, and this is just another rule which is easy to apply. And we know that wave C will be bigger because it's 5 instead of 3, so it's 3, 3, and 5, which means the A and B are 3 and C is 5, so we expect C to be bigger, and it should be bigger by this ratio 1.618. Number 8, in a symmetrical triangle, each wave is related to the prior wave by a factor of 0.618. So now in a symmetrical triangle, if you remember, what happens in one of these is that we see up and down movements, in this case up and down waves, that get smaller as the triangle, as the sides of the triangle converge. And each wave will be essentially equal to the previous wave times 0.618. So it'll be smaller by a factor of 0.618. So that's how we can calculate the length of that wave. So what we have seen here in these 8 different rules is that we use Fibonacci ratios to find the magnitude of the waves, right? How long will the waves be? How wide will they be? When will they extend? When will they not extend? We can use Fibonacci ratios to do this. And this is quite an integral part of Elliott wave theory, because what we're going to do if we want to trade on this information is that we are going to see part of the wave pattern, not all of it obviously, we need to trade before the entire wave pattern comes. We'll see part of it, and then we will use this to get an estimate of where the wave is likely to end up going. So once again, just to reiterate, these are obviously all estimates. These are just what we are likely to see. We never see exactly these things, but these are estimates, and these are what we need to go by if we are applying Elliott wave theory and Fibonacci ratios to our analysis. Fibonacci retracements. Now here is something that chances are many of you have seen before. Fibonacci retracements are a method which we can use to determine the length of a price correction. Now, this is slightly separate to Elliott wave theory. We don't really talk about waves too much. We do use it in the context of waves, but it can be applied even if we're not using waves, if we're just using general trend analysis, for example. So, if you remember, when we talked about trend, we talked about how following a trend, the price will usually retrace a portion of that move. And in Fibonacci retracements, what we are expected to see is that the price will retrace a certain portion of that move that is related to the Fibonacci ratios. So the Fibonacci ratios will be 0.618 and 0.382, that are the important ones. And we also have 0.5 as a retracement level. So these will be our main retracement levels. There will be 0.618 or 62%. There will be 0.5 or 50%, or 0.382 or 38%. So if we just look at the top and bottom numbers, that is 62% and 38%, during a trend, we should expect to see the price retrace between 38 and 62% of the move. Right? So in between these Fibonacci ratio numbers, we should see the trend retrace part of within that. So if we have a strong trend, then the price will retrace closer to the minimum level of 38%. If we have a weak trend, the price will retrace closer to the maximum retracement level of 62%. So one thing that is important to know here is that when we see that this does not occur, so if we see a retracement greater than 62%, greater than this Fibonacci retracement level, then it's possible that we have a change in trend. It doesn't mean that the trend is definitely changed. It doesn't mean that the trend is definitely changed, but it may indicate that this is the case. We would also look at other indicators to confirm this. And if we don't see a retracement up to 38%, then it may not have been a retracement at all. Alright, so that's the way to think about Fibonacci retracements. We'll now look at an example. We'll look at a real life example and see what it looks like. We'll just draw the retracement lines on a graph and then take it from there. Fibonacci retracements. So here we have a graph. Now for the moment, just ignore all the black lines. I've also got my pointer here. Ignore the black lines. This is essentially the rupee against the dollar from September 2008 until December of the same year, December 2008. We can see that the dollar started at around 45, so this level here is 45, and ended up just above 48. So what we are going to do now is look at the retracement for the Fibonacci retracements. So the first thing I've done here is identify the top of the trend, which I identified as being this point over here. So I've drawn this line as the top of the trend, right? And I've drawn the start of the bottom of the trend down here where the graph starts. So I've drawn a diagonal line to connect the bottom of the trend to the top of the trend. Now each of these three lines here, 1, 2, and 3, represent retracement levels. So this is the 62% retracement level. Sorry, that's the 38% retracement level. This is the 50% retracement level. And this is the 62% retracement level. So between here and here, half of the move would be in this middle line, 50%. 38% of the move would be this line. If we come to this line, 62%, that would be 62% of the move. So what we expect to see is that we have this uptrend in the rupee from here, starting at this point, all the way up to up here. That's the top. And now we should see a retracement, right, to one of these levels. And we can see this actually quite clearly, because if you look, the price retraces quite a large portion of the move. In fact, it actually goes all the way to here, right? So it retraces around 62% of the move of the prior trend before coming back up and stabilizing. So this would be, we would consider this to be a fairly weak trend because 62% of the upward move was retraced. But then you can see here that the retracement levels can often correspond to what we actually see in practice. So sometimes the challenges that we have with trend retracements is picking the right retracement level. So Fibonacci retracements are a way to do this. We can use the Fibonacci analysis to pick the right retracement level, either 38%, 50%, or 62%, and we should see the trend bounce off this before continuing back upwards. Fibonacci time targets. So now we are going to carry on with our discussion on Elliott wave theory. So in the beginning of the lecture, we talked about the three different concepts we apply to wave theory. So they are pattern, ratios, and time. So we spent a good first half of the lecture, maybe a little bit more, talking about the patterns, right? The different wave patterns, the corrective patterns. Then we spent the last part of the lecture so far talking about ratios. So that was looking at the length of different waves and how we use Fibonacci analysis to determine those ratios. That includes retracement levels too. And finally, we are going to talk about the last one, which is time. Now this is actually the only slide we have on the time concept. And this is because, as we said earlier, the time targets are usually the hardest to predict. They are often not used. So I'll put a big disclaimer in front of this one, is that Fibonacci time targets are often not used because they don't work that well. So a lot of people do believe they work, so you can decide for yourself by trying it out. But let's explain quickly what it is first. So what we do is that we use Fibonacci time targets to predict when significant tops or bottoms will occur. So we're looking at significant turning points in the price, be they tops or bottoms, and using Fibonacci time targets to tell us when they are likely to occur. Now let's assume we have a daily chart. Now on this daily chart, let's say we start with an important turning point. So we started with a turning point where the prices made a significant change. It could be a top or a bottom. And now what we need to do is determine when the next turning point will be. Right? So we've made a significant turning point. We need to determine when is the next top or when is the next bottom going to be. When is the most important next important event going to occur. So according to Fibonacci time targets, what we should be doing is looking out for the next significant movement or the next significant point on a day equal to one of the Fibonacci numbers. So in this time targets, we're going to be using just the Fibonacci numbers rather than the ratios themselves. So some of the Fibonacci numbers I've listed: 13, 21, 34, 55. So on a daily chart, we can expect the future tops and bottoms or future major turning points to occur on the 13th day or the 21st day or the 34th day or the 55th day following our initial movement. So this is essentially what a time target is. We just use the Fibonacci numbers to figure out what day something will occur. Now this can be doesn't have to be daily charts. It can be a weekly chart, in which case it would be the 13th week or the 21st week or 34th week, etc. It could be an hourly chart, the 13th hour, 21st hour. So you can play around with this however you like. It can be any unit of measurement. And this is how it works. Now, it is not very scientific, as you can see, this method, and that's one of the reasons it's not used that often. But obviously it's still worth a mention because it is still part of Elliott wave theory.